Hello and welcome back to goldstocktrades.com. Today we have a new and special guest with us, Ian Slater. Ian is founder and CEO of Red Eagle Mining. Red Eagle can be traded as RD on the TSX Venture, and it also can be traded as RDEMF on the OTC. Thanks, Ian, for being here with us today.
Well, thanks for having me, Joe.
Ian, let's talk about Red Eagle. Earlier this year, you announced a PEA. Your projects in Colombia, you have some of the top shareholder support. Can you talk to us about the quality of the asset that you own in Colombia?
Sure. So to date, we acquired the property in just 4 years ago. First drill hole was in September 2011. So in 3 years, we've taken this from a discovery hole through a PEA, through 2 resource estimates, a PEA last October, and we'll have our full bankable feasibility study this September. So in 3 years from discovery hole to feasibility, and expecting our permitting by the end of the year, so we could be in construction next year. And the deposit itself is, it's an underground mine, 5 grams. So far, we've just in the top 200 meters, right from surface, we've dilated 500,000 ounces. So it'll be 1,000 tons per day is what we're going to start with. So we'll have 50,000 ounces for 10 years. But the deposit is open at depth. Our deepest drill hole is 700 meters, still hit mineralization. And we just acquired the ground to the east where the deposit was clearly cut off by the concession boundary. So we have, we're open along strike from ground we just acquired from Anglo Gold. So the plan is to be a 50,000 ounce producer in 2016. But during 2015, while we're building the plant, to drill out some of the satellite deposits, because this is a cluster of deposits and all of our drill holes are only in the first one. And these deposits aren't just grassroots exploration. The oxides on them have been mined for hundreds of years. So to drill some of the other deposits and have a cluster of mines with a central processing facility, and to ramp up the production from 1,000 tons per day to 2,000 tons a day and 100,000 ounces within a few years of commencing production.
Ian, let's talk a little bit about this recent news that you acquired this extension from Anglo Gold Ashanti on the San Ramon project. Could you talk to us about the current size of the resource and the potential for growth? Because that's a key aspect, is what's the growth potential behind this project? And I'm curious to hear how you see the potential growth here with regards to building further resources down the road.
Well, when we in the summer of 2012, we'd already made our discovery, and the plan at that point was to continue to consolidate the project as we have and drill the other targets. But it was a tough time to raise capital, as it still is. So we had a handful of private equity groups come down to the project, and we chose to go with Liberty. But Liberty's what they wanted was they wanted us to drill out the deposit we'd already discovered and put it in production as soon as possible, so that they could have cash flow from a royalty and dividend stream. So at that point, we changed our plan from drilling out what we believe is a multi-million ounce resource with the different satellite deposits to develop San Ramon. And since then, we've consolidated the district. So we've acquired, in 2012, we acquired all the surrounding property from Bob Allen's Grupo de Bullet. Then in 2013, when staking was opened again in Colombia, we staked all the free ground in the district. And then just last month, after years of negotiations with Anglo Gold, we've acquired the remaining ground. So now we've got 350 square kilometers right in the core of of Antioquia, of the Antiochian batholith, which is the major gold producing region in Colombia and has been for centuries. So we have enormous area to explore, and a lot of targets that have where the oxides have been mined, but just the oxides are only 20 meters deep. So there's lots of opportunity to build the resource in the sulfides as we go forward.
Ian, you mentioned about your largest shareholder, which is Liberty Metals and Mining. Can you talk to us about how much money that you've raised and you've invested into the project so far?
Sure, we've we've raised $55 million to date for the project, including the acquisition costs and the exploration to date. And the largest amount of that was probably half of the capital raise was from Liberty between the various equity raises when they first came in October 2012, and they maintained their stake in the recent bought deal we did, and the royalty purchases.
Can you talk to us about the significance of who Liberty is and what sort of company it is?
Sure. I mean, they're one of the best investors in the mining space today. They have they typically take a 20% stake and have a board seat, and are very supportive shareholders. I mean, the best shareholders that we've worked with. They've been very helpful in the 2 years we've been working with them at every step along the way. And assuming that the DFS is not materially different from the PEA, which it's not, that's where we're almost completed it, and nothing else changes, we'd really expect them to be there to maintain their 20% in the capex financing round as well. And they have a board seat. Then they just went through a change in personnel, so that new director from Liberty will be appointed in the summer.
What's interesting to note about Red Eagle is you announced a PEA earlier this year, and exactly in October 2013, and now you're going straight into the Bankable Feasibility Study. Can you talk to us about the quality of the asset, the engineering, the metallurgy, the type of mining that you're able to kind of skip that step of a pre-feasibility?
Sure. Well, we haven't skipped anything. We haven't taken any shortcuts. We've done all the technical work that you would need for a bankable feasibility study. We just thought it was an unnecessary step in cash and time to do a pre-feasibility study and then a full feasibility study. And really it comes down to the experience of the management team. Bob Bell, who's our COO, has built lots of mines that are very similar to this. So he was one of the founding partners of Minproc's mining division. So he's seen these type of projects right through feasibility, permitting, and construction and operations. Before he joined us, he was GM of Dundee's Chelopech in Bulgaria, a big underground copper gold mine. So he's been there and done it before. And Albert Baca, who's our project director, who lives here in Medellin, for a lot of his career, he was head of construction with Ashanti in Ghana, and also built mines all around the world. So these two guys have been there and done that. And together with our consultants, Mine Development Associates, who you know well, in Reno, have done all the resource estimates and reserve estimates now for the feasibility and the mine plan. And Lycopodium, who are doing our DFS and the designing the processes. So they're Lycopodium isn't as well known in North America. They're an Australian outfit, but they've designed. They specialize in designing these type of mines and have built dozens of them around the world. So between all the expertise there, we could do that. And really, it comes down to the project. Is that the project is relatively straightforward. So from the geology to the mine plan to the metallurgy to the plant that we're designing, it's all really standard. There's nothing new or exciting. It's just a mine that's been built many times before.
Ian, there's been a lot of interest in Colombia. There's still a lot of questions that remain about permitting and the jurisdiction, but we've seen some of the majors such as AngloGold Ashanti put a lot of money into Colombia. how does Red Eagle fit in with when you're looking at assets that are going to be coming into production? Can you talk to us about some of the juniors and where Red Eagle stands out?
Sure. Well, I think that there was. I'll answer that question, but as well to expand on it, I think there's two big problems that happen in Colombia. There's a lot of money was, as you know, a lot of money was spent here in the last decade in gold exploration, but you had a really unfortunate story in Santander with Greystar, where they were. There's a lot of opposition to permitting that open pit mine in a watershed for Bucaramanga, a town of 1 million people. So that's I think that's a unique situation. And then you had the government being really overrun with applications when there was when Colombia became a very exciting destination in 2009, 2010, and there were dozens of companies coming down here staking. Well, at the same time as there was more staking than had ever happened in Colombia, these same companies were hiring all the geologists away from the government. So there was nobody to do the technical studies that they needed to grant the concessions. So you had a perfect storm of it not working. But then, that was resolved last July, and we've successfully staked and converted to concession since then. So that problem's been resolved now. But I think it left a bad taste in a lot of people's mouth, because you could imagine we never had the problem because Santa Rosa, when we purchased it, they were already concessions. But if you invested in a junior company that had applications in Colombia and they were not converted to concessions for years, and you can't drill until they're concessions, you'd be very frustrated, management and shareholders. So that's resolved. And then the other one was really to do with the type of the targets that people were looking at then. So most of that money was spent in the Mid-Cauca Belt drilling for gold porphyries, which are huge open pits and huge capex. And of course, from a Colombian perspective, there are no open pit gold mines in Antioquia, so there would be a huge educational process, both with the permitting agencies and with the local populations. And then if you look globally at the mining industry, those projects went out of favor and couldn't be financed. So you had a lot of projects in the Mid-Cauca Belt which are really dead in the water right now. So if you look at who is active in Colombia, really you have Atico, which purchased an operating mine, and that was permitted decades ago. And you have Mineros, which is listed in Colombia. They were primarily an alluvial producer in Colombia, and their hard rock mines are actually in Nicaragua now. And Continental, of course, who are moving forward through the permitting and construction, and they've got their decline in, and it's a great project. But theirs is such a big more scale than ours that it'll take a lot longer to get that permitted and in production.
Ian, as we can conclude, the San Ramon project is one of the highest IRRs of some of the junior companies that are at the same stage that you're at. We've seen a recent interest in takeover in M&A activity. Can you talk to us as we conclude about where Red Eagle fits in the junior space?
Sure. If you look at our cash costs or our IRR before tax is 47%. That's up there with the very best development projects globally. I think what the real concern is, as we've addressed, is permitting. So once we have that, once we have our permit, that will be really be the catalyst. And at that point, we definitely would be a takeover target for a tier 2 gold producer. But we don't mind if that happens or not, because we're going full speed ahead with building the mine anyway. So if we get taken out, then and it's a better return for shareholders, that's fine. If not, and it's a better return for shareholders to build the mine, we'll continue doing that. And once the mine's built, the plan would be to acquire other projects in Colombia and build a mid-tier gold producer and pay dividends.